Hi everyone, Kathleen Brooks here, Research Director at XTB. It's a big week for financial markets. There's a ton of event risk, including a Fed meeting on Wednesday and a Bank of England meeting on Thursday. The market is not expecting any change in interest rates from the Fed or the BOE this week, but these meetings will be vital for financial markets. The Fed will also release its latest dot plot and its updated economic projections, which will give us an idea about what the Fed could do next. The market currently expects 2 interest rate cuts this year, with the first cut expected in June and the second in September. This Fed meeting comes at an interesting time for financial markets. President Trump has started a trade war, and that hangs heavy over this meeting. This Fed meeting and the accompanying economic assessments will be one of the first major reviews of the potential impact from tariffs on the US economy. The market is expecting a downward revision to economic activity and the potential for inflation forecasts to be revised higher. Now, this is a toxic mix for financial markets as it threatens a return to stagflation. Regarding the dot plot, we don't think there will be much change, largely because the Fed will want to wait and see the impact from tariffs and a changed economic order before adjusting monetary policy. Added to this, there have been some changes in stance from Fed members in recent months. Some hawks have become doves and vice versa, although overall the Fed is tending to lean to the hawkish side in recent months. Although inflation is falling, the disinflation process is taking some time, and now there is the potential headwind from tariffs. The tone that the Fed sets at this meeting will be crucial for the direction of financial markets. If they sound concerned about inflation, then we could see stocks come under pressure, just as a rally has started to take hold. The S&P 500 has risen in recent days. However, we think that US indices will be cautious leading up to this Fed meeting. There is a key resistance level at 5,700, which could limit the upside for the S&P 500. We doubt that the Fed will sound concerned about the recent sell-off in US equities. The S&P 500 is lower by 7% in the past month, and the Nasdaq is down by 11% in the same time frame. While the Fed is unlikely to throw stock markets much of a life raft, it is worth noting that bearish sentiment towards US equities is at an extreme level. A recent Bank of America survey found that investors reduced their exposure to US equities by the most ever in recent weeks due to the worsening outlook for US growth. Instead, investors are pouring into European equities, which are outperforming US stocks so far this year. We expect this to continue. However, the sell-off in US stocks could slow after reaching these extremes. And finally, in the UK, the Bank of England is not expected to change interest rates this month. The market is expecting a further 2 rate cuts this year, with the next cut expected in May. We don't think that the Bank of England statement will rock the boat this Thursday, and instead the Bank of England meeting should pass without incident. The pound is approaching a key level versus the US dollar at $1.30 in the lead up to the Fed and the BOE meetings. If the Fed focuses on growth fears at this meeting, then the pound could extend gains and life above 130 versus the US dollar could become the norm for this pair. That's all for now. Thanks for joining.